This conference will now be recorded.
Okay, in the last session, we understood regarding accounts payable and accounts receivable. Now let us try to understand another point related to assets. So I'll put assets. Now this is again one of the key topic related to SAP FICO, wherein most of the people say that asset accounting, it's tough one, tricky one, complicated one. In fact, this is the easiest one in your FICO. What you need to do is you need to understand asset accounting from a client point of view, from a business perspective, so that you will understand the impact of it. If you are not aware of GL, if you are not aware of AP, if you are not aware of AR, that is still fine. You can sit and understand individually because that is straightforward. But when it comes to asset accounting, this is not something that you can sit and learn individually straightforward, because this is a little tricky point. When I say this is little tricky point, this is something which is your country specific object. Whenever you talk about asset accounting, first point that you need to understand is this is your country specific, and whatever you talk about country specific is usually called as localization. This is also called as legal requirement. So when you talk about country specific, when you talk about localization, when you talk about legal requirement, we are talking about things that are particularly applicable to a particular country. Meaning, if you are working for a project which is related to India, no other go, you must know how assets are treated in India. If you're talking about a client where you worked for Singapore, you must know how assets are treated in Singapore. If you're working for US, you must know how assets are treated for US. Meaning, in general, what we all do is we will put some experience, or you say that you have 3 years of SAP FICO experience, 4 years of SAP FICO experience, whatsoever. According to that, you need to make sure whatever the projects that you have listed in your resume, first thing you need to understand what are all the clients that you have listed. Everybody will put 3 to 4 clients, one implementation, one support, rollout, likewise. Based on the nature of project that you are showing, based on the client that you are working, first thing you need to understand is your client belongs to which country, or for which country you have supported, for which country you have given your implementation. Let's say I worked for a client who is operating in India. Now I said that I am, or my resume is talking about I have experience on asset accounting, or I'm good at asset accounting. One of my project roles and responsibility is talking about asset accounting related stuff. What I need to do here is I need to make sure 2 points. Point number one, how asset accounting works in SAP. First point, how asset accounting is working in SAP. This is from the SAP point of view, because according to SAP, asset accounting is common. If you look at, so let me not show SAP now. If you look at SAP for asset accounting, irrespective of the country, it is the same screen. It is the same screen for all the countries with respect to configuration. Meaning, at the time of configuration, there are no special features for asset accounting. It is common asset accounting according to SAP. Understand how asset accounting works in SAP. First point. Second point, what you need to understand is for which client, for which country are we talking about. If you're talking about Indian client, Indian project, you must know some basic information related to fixed asset according to that particular country. Reason, for every asset there is something called a depreciation. The moment you talk about asset, you're talking about fixed asset. The moment you talk about fixed asset, as we know, as we studied in our academics, any asset which will give you benefit for more than 1 year, any asset which will give you benefit for more than 1 year, you typically represent it as fixed asset. Any fixed asset will start reducing its value because of wear and tear. When I say because of wear and tear, either you use it or you keep it aside. As days passes by, value of the asset will start coming down. This value of reducing your asset is represented by depreciation terminology. So the moment you talk about fixed asset, you should talk about one more thing called depreciation. And you have asset, you have depreciation, you need to talk about another thing called net book value. You need to talk another thing called net book value. How net book value is calculated, you need to understand. Meaning, you have asset minus accumulated depreciation is equal to net book value. Like this, basic fundamentals you need to understand. These are all one liners. All these points is something that you are already aware of. There is nothing new that you are learning here in SAP FICO. Whatever the knowledge, whatever the understanding which we already have before, you are just refining it, you are just revising it. Otherwise, what will happen? You will start looking at everything from the scratch, assuming this is new thing in SAP, but practically there is nothing new in SAP. It is all whatever we are already aware of. It is just that you need to open those connecting points and then understand. In that way, you are going to find it more easier. In that way, you are going to find it more convenient to understand, connected to the point, connected to the subject. And once you have this information, make sure according to India how assets are depreciated. For talking about India, you need to understand how depreciation is calculated. First of all, if I forget about any country, how depreciation is calculated? You will have to charge depreciation on the asset value. How you will calculate depreciation? Maybe you will calculate based on percentage, you will calculate the depreciation, or based on the life you will calculate the depreciation. Meaning, when you're talking about percentage, it can be your straight line method, it can be your WDV method. It can be straight line method, it can be WDV method. When you're talking about life, this is called as your useful life method. These are the three most commonly used depreciation methods in any country. Most commonly in any country, you will have these three standard depreciation methods. Make sure you are able to understand these points first. Forget about country, forget about your client. Make sure if you take a simple number, you are able to compute the calculations. Simple round figures you take. 100 is the asset value, 10% is the depreciation. 100 into 10% is 10 rupees. On 100, 10% if I put 10, am I going to put this 10 annually or am I going to put this 10 monthly? You need to understand. Okay, depreciation is always calculated annually, posted monthly. Meaning, if I calculate a depreciation 10%, I am going to get 10% on 100 as 10 rupees. This 10 rupees I am not going to post in 1 month. This 10 rupees I will divide to the total year. When I am dividing this 10 into my total year, I can divide my year in two ways. Point number one, I can divide my year multiplied by 12 months, meaning 1 year divided by 12 months, or I can divide my year by number of days. I can divide 1 year divided by 365 days. Either ways you need to account your depreciation, meaning depreciation can be posted either on a monthly basis or on a daily basis. If you are posting on a monthly basis, every month you will get equal depreciation because you are differentiating between 12 months. So every month you will get equal depreciation if it is monthly distribution. If you are distributing on a daily basis, you will get a different depreciation on a monthly basis. Reason, every month you have number of days in different way. In January you may have 31 days, February you may have 28 days in some cases, 29 days in some cases, March 31 days, April 30 days. You are distributing depreciation for 31 days, 28 days, 30 days will give you different figure. Make sure same asset used for 1 year, but every month there is a same depreciation in one case, every month different depreciation in the other case. You need to slowly understand the connecting point. When you're able to understand, when you're able to get the connecting point, you will not find any difficulty anywhere, because all these calculations in asset accounting are taken care by system itself. SAP itself will take care of all this calculation. All you need to do is just monitor whether things are going right or wrong. Monitoring, supervising is very easy, because if somebody is asking you to sit and do it, then that is where you need to worry about it. But nobody is asking you to sit and do it. You just need to define configuration one time, When you define the configuration, make sure you sit with your client. And when you sit with your client, make sure to which client you are working. When you understand who is your client, understand for which location you are going to configure asset accounting. Meaning, if you are configuring it for India, understand how fixed assets are treated in India. If you are configuring it for US or any other country, understand how assets are treated in the other country. When you get this basic information, you are technically having some knowledge, because this is your country specific, this is your localization, this is a legal requirement. When you talk about country specific localization legal requirement, this is common for all the clients, this is common for all the companies in that particular country. For example, if you take India, any client who is working in India, for all the clients, whoever is working in India, they will have to follow asset accounting in the same way. Same way I mean to say, because this is the legal requirement. Legal requirement means it is decided by the country. Whatever the accounting authorities who have, whatever the tax authorities who have, they will be defining how depreciation will have to be accounted and how they need to represent their fixed asset values in their balance sheet. According to this point, we need to make sure calculations are taking place, reports are coming fine, and how they are capitalizing the asset. When you're talking about asset, you're all talking about fixed asset. Now it's a basic fundamental thing that we all studied in our accounting. To start any business, you need capital. To start any business, you need capital. Capital is brought in multiple ways. Point number one, you will be bringing your capital either in cash form, you will be bringing your capital either in bank form, or you will be bringing in your capital by way of some fixed asset. In order to start a business, you need some minimum fixed asset, like you need a computer. Computer is an asset. You need some kind of AC. You need AC. AC is an asset. If you are purchasing a new building, building will become an asset. Whatever the other things that you are purchasing, you may be purchasing a printer, you may be purchasing chair, sofa set and all these things are represented as your fixed asset only, because all these things will have a life of more than 1 year. Any asset which is giving you benefit life for more than 1 year, we typically represent as fixed asset. Now all these fixed assets, what you will do, you will have to account them in a separate way according to the country specific local requirement. These requirements, whatever you have with respect to country, even if you Google it, you will get it. This is not company specific, this is country specific legal requirement. You take any Google link, everywhere you will find the same content, because the way one asset has to be depreciated, everybody will put the same representation. Meaning any company website that you take, any audit company's website, blogs that you refer, you will get to know the information, and this information is what you need to understand first. When you're able to understand this information, tomorrow when you practice asset accounting in SAP, you're going to do the same thing. Meaning, if country specific localization legal requirement points are not there in our mind, whatever you understand, whatever you practice with respect to asset accounting is not going to help out, because this is not a generic topic like your AP ARGL. Because accounts payable, accounts receivable and your GL, you can straight away configure, straight away work, as they are not country specific. Everywhere you will deal the customer vendor GL account in the similar way. But when it comes to asset, it is treated in a different way, because you need to follow rules and regulations, guidelines provided by the respective country. For that, to make sure, you will have to follow certain guidelines, and these guidelines will have to be kept in your mind unless and until you understand clear cut asset accounting. Now, next point, what you will do here is you need to understand how assets are created, how assets are managed in any organization. If you take, now when you're taking any asset, when you're taking any organization, you need to think practically. You're talking about asset accounting in SAP FICO. Now SAP is an application which is used by only the top level companies. SAP is an application which is used by top companies, meaning small companies cannot afford SAP, because SAP is the expensive application. License cost is very high. Small companies cannot go for SAP. So forget about those small companies. Think about the companies which are going for SAP, meaning these are all MNCs, these are all multinational companies or large scale companies. So for all these big companies, you will be having a lot of asset. When I say lot of asset, for example, I would say there is a company, and let's say there is a company. In that company, there are, I would say, 1,000 employees. In the company, I would say there are 1,000 employees, quite common. Nowadays, 1,000 employees in a company is quite common. Now, all these 1,000 employees are working on system only. All these 1,000 employees are coming to office. Let's say that they are working in system. Now, you definitely need 1,000 computers here. You will be requiring 1,000 computers or laptops are required here. Now, every computer is treated as an asset. Every laptop is treated as an asset. If you look at any company's organizations laptop or desktop, whatever you are using, if you turn back your laptop, you will find some numbers written with permanent marker pen or some stickers stick to it containing some number there. That is nothing but your asset tagging. That is nothing but asset tag. Tomorrow, if they wanted to identify where is this laptop, which employee is using this laptop, you will be identifying by looking at the asset tag number. Now, how you are going to tag this, you need to understand. And if you have 1,000 employees, you are going to create 1,000 asset because you will be purchasing 1,000 computer. Now, not 1,000 computers are purchased on the same date. One computer may be purchased today, one may be purchased 2 months ago, one may be purchased 1 year ago, one may be purchased 3 years ago, one may be purchased 4 years ago, one may be still with you, but the value is already become zero. It is fully depreciated. How you are going to deal with it, you need to understand. Similarly, you may be having 1,000 employees, you need to make sure 1,000 seats are available, so you'll have to create 1,000 chairs. You'll have to make sure 1,000 chairs minimum available. Definitely you will be having more than 1,000 chairs, but 1,000 chairs you'll have to minimum arrange. And if you have 1,000 employees, you need to arrange at least 500 desks, because on each desk, if you are making sure that two employees are sitting opposite, then at least you will be requiring 500 desks to manage. Now you will be requiring something called furniture here. Now furniture also an asset. Without furniture also no company can operate. Meaning, to the moment you start creating a company code, the moment you start thinking about a company in SAP FICO as part of your practice, asset accounting becomes mandatory. Because you should always stick to your fundamentals basics. We all studied in our academics stating that to start any business you need capital. One of the source to introduce your capital is your fixed asset. You will be investing by way of a fixed asset, because without fixed asset you cannot start your business. You need computer initially, or at least for you to sit you need a chair. You cannot stand and do the business. Even to sit you need a chair. This chair is an asset. Even for somebody to call you, you need a phone. Phone is an asset. Whatever you think, everything will become an asset only. Initially, whenever you start your business, everything you are going to call it as an asset only. Make sure you are able to understand what is asset, what is the importance of asset in any organization, and how these are treated. This is one point. And the other point that you need to understand here is you need to talk about your reporting. When you're talking about reporting, especially when it comes to asset, you will have different reporting dimensions. Meaning, for every country you have country specific accounting standard or country specific accounting principle. We know what is accounting standard, we know what is accounting principle. According to accounting standard, according to accounting principle, you will have to follow the local guidelines provided by the accounting standard. For example, if you're talking about India, you will have to follow Indian accounting standard. If you're talking about US, you'll have to follow US accounting standard, which is nothing but US GAAP. Similarly, if you're talking about Singapore or any other country, that country specific accounting standard must be followed. Each accounting standard will tell you guidelines how the assets will have to be treated. This is from your accounting perspective. Similarly, for your fixed asset, you will have another reporting perspective called tax reporting. According to income tax also, you have to calculate, you'll have to file the depreciations. According to income tax also, we need to calculate and show the depreciation. As per income tax, how do we calculate the depreciation? You need to understand. Similarly, any company that you're talking about, we understood these are all global companies, meaning operating with multiple countries or operating with multiple sub entities. When you are operating with multiple countries, multiple sub entities, you are going to do something called consolidation at the end of the month. When you're talking about consolidation at the end of the month, make sure how you are going to consolidate. Sorry. When you're talking about consolidation, make sure how you are able to consolidate it. In order to consolidate, you should have the common logic, common approach applicable for everywhere. In India, I am telling I am following Indian accounting standard. In US, I am telling I am following a US gap. In Singapore, I am telling I am following Singapore gap. I cannot have the common approach through which I can do my consolidation. Consolidation means doing a total. Three different methods I cannot total because these three are talking about three different approaches. I should have common approach to do the consolidation. This common approach for any company's consolidation is majoritarily IFRS accounting principle. You need to understand IFRS, what is IFRS, how this IFRS is used for your consolidation purpose. And when it comes to your reporting, you need to know how the reports are handled. Meaning, if you're talking about asset accounting, you should talk about the different reporting, different reports, and accounting standard, accounting principle based on which these reports are generated. Without which, whatever the understanding that we have on the asset accounting is not going to help. Because the practical points, connecting points, make sure you're able to understand. And to understand the asset accounting, you have again prerequisite. Meaning slowly what is going to happen in SAP, especially on FICO, everything will have dependency on the other point. Now, for example, I'm talking about asset accounting here. So far, it is very clear that we are talking about asset accounting. I understood asset accounting is country specific, asset accounting is fixed asset, more than 1 year benefit, depreciation, net book value, accumulated depreciation, depreciation method, straight line method, WDV method, useful life method. Every company will have a lot of asset mandatory. Everything is clear so far. I'm able to understand in a very good manner. Now comes the point. First thing, in order to purchase an asset, what you need to do? You need to identify the need. You need to identify the need that one asset is required. And how do you identify the need? Again, for identification of a need, purchasing of an asset, you are dependent on accounts payable. Meaning, without accounts payable, you cannot make any purchase. Straightforward. So your asset accounting has got a direct dependency on accounts payable module because purchase is not possible without AP. Without AP, A is or asset accounting is not possible without accounts payable. So everything is interconnected here, meaning no way you will see asset accounting separately, no way you will see accounts payable separately. You need to see it together, connect with each other once you are thorough with the basic fundamental points. Only then you will be able to understand the business processes, what exactly happens in any organization, how they operate with these activities in any project. Tomorrow, if I wanted to create an asset, how do I create an asset? Who will create the asset? Now, what kind of expense is this asset? When you're talking about expenses, you have two type of expense. You need to represent something called OPEX, something called CAPEX. And we cannot say that no, I am a FICO consultant, I am not supposed to know about this. You cannot become a FICO consultant if you are not aware of this. Because tomorrow when you talk to your client, tomorrow when you talk to your user, they will be using the same terminology. CAPEX, OPEX and all they will be using. If you say that no, CAPEX is not part of SAP, OPEX is not part of SAP, then you are not part of SAP. You'll have to make sure the points, terminology that is used by the client, users in their day-to-day business operations, you have to understand, you have to relate it to it. So that tomorrow when somebody is asking these points or tomorrow when you're interacting with anybody, when you find these terminologies, when you're explaining, make sure you use right words, which will allow you to talk in such a way that the other person will feel comfortable, they feel convinced with what you're talking. Otherwise, you sound explaining only the basic configuration which everybody talks. Make sure you avoid talking the configuration step. Start explaining about the business process through which you can convince the other person, you can get a positive opinion, positive feedback from whosoever you talk to. That should be the target. Okay, you should know that any asset that you purchase is represented as a capex. Capex is nothing but capital expenditure. Capex is nothing but capital expenditure. OPEX is nothing but operating expenses. So anything that you are purchasing which is related to capex, you are talking about asset purchases. So here when you are talking about it, you need to understand how you can purchase an asset. Point number one, you can purchase directly from the open market. Let's say you want to purchase a refrigerator to be kept in your pantry. To kept in pantry, you need to purchase a refrigerator, or for employees, for staff to heat their food, you need to buy a oven. You need to buy a microwave oven. This microwave oven is also an asset. Now how you will buy the oven? You will go to a shop, you will purchase it, or you will place an order. Either you go purchase it directly or you place an order. Either ways you are dependent on accounts payable. When you're talking about accounts payable, you're talking about purchases. When you're talking about purchases, point number one, you can go do a direct purchase. Point number two, you can do the purchase based on the purchase order. So here you need to understand how purchase is happening. Once you purchase the asset, the moment you purchase the asset, based on the asset, you will come to know what is the life of the asset. When I say based on the asset, we will come to know what is the life of asset. There are some assets which will give you benefit for 3 years. There are some assets which will give you benefit for 5 years. There are some assets which will give you benefit for only 2 years. So the benefit that you are going to get with that asset is represented by life. You are not supposed to use asset for lifelong. You're not supposed to use asset for lifelong. Each asset, how long it has to be used, decided by the respective accounting principle. Accounting standards will tell you how long you are supposed to use the asset. Maybe you'll have to use it for 5 years, or you'll have to depreciate it 10% until it becomes zero, or 15% until it will become zero. You will have clear-cut instructions provided by the accounting standard. Make sure you understand these accounting standard. Accordingly, you will apply your asset accounting. And once you start the asset accounting, once the asset is purchased, as long as you're using asset, you will have to start calculating the depreciation on it. As long as you're using, you will have to start calculating the depreciation on it. This depreciation is an expense. Depreciation is an expense. Now, how your expense is booked, you'll have to understand. One point, you have to reduce the value of asset and you need to charge it to P&L. Meaning, when you make the purchase of asset, you are going to charge it to balance sheet. Your asset is a balance sheet item, you are going to debit your balance sheet account. But after first 1 month, your asset value will come down. Same example, if you purchased a new mobile phone. Assuming that I purchased a brand new mobile phone today on 1st of February, on 5th of February. For 1 lakh rupees, I purchased a brand new Apple phone or Samsung phone. Now I used it for 1 month. On 28th January, or sorry, on 20th February or on 1st March, I wanted to sell my mobile phone. Now, since I purchased it for 1 lakh, I used only for 1 month. I am not going to get 1 lakh in the market because my value is getting decreased. Point number one, because I used it. Point number two, I purchased it last month, but I did not use it. I purchased it last month, but I did not use it. I have not even opened the box. The seal also I did not open, but the warranty of this asset had already started from last 1 month. So according to the asset, what happens? The moment you capitalize the asset, the life starts beginning. Meaning, as long as the asset is with me unsold, I am not going to call it as asset. I am going to call it as a stock because I am selling it. If I am using it, I will call it as asset. If I am selling it, I will call it as a stock. So you need to understand the differences. If you are using it, you are going to call it as an asset, which is your fixed asset. If you are not using it and if you are selling it, then you are going to call it as a stock, inventory. Meaning, one way it can be a fixed asset, The other way, same thing, it can be a current asset. Now, when this will be fixed asset, when this will be current asset, slowly we need to start understanding the differences. Okay. Now, when you are using the asset, what is happening? Value of it, value of the asset is getting reduced because of the time, because of the usage that you are doing. So you will not get the same value after a day also, meaning every month value of the asset will start coming down. How it has to be brought down, you will be provided with the detailed descriptions, detailed information by the respective accounting principle called depreciation calculation method. Applying the depreciation calculation method, you will find out the current value of the asset, and at the last day, maybe due to different reasons, sometimes you may have to sell the asset. Sometimes you may have to sell the asset. If you want to sell the asset, anything that you are selling, you are supposed to get profit. How do we get profit? How do we get loss on the sale of asset? You need to make sure manually you are in a position to find out profit loss from the asset sale. When I say manually, you are in a position to find out profit loss from the asset sale, assuming that you purchased the asset 3 months ago, 5 months ago, 6 months ago, and you used the asset for 5 months or 6 months, and you should know what is the value of your original purchase, what is the depreciation that you are charging, and when you are selling it on that particular date, what is the current value of the asset and what is your selling price of the asset. According to this, whether you are going to make profit or you are going to incur any loss. Make sure you are able to find out all these numbers along with the calculations with clear understanding. Same thing, when you do it in SAP, you are going to get the same figure. Make sure the manual rough calculations, whatever you do, should become the exact accurate calculations in SAP. When you find numbers are matching with your calculations, you will find it interesting, you will find it comfortable, you will find it easy. If you calculate 100 rupees is coming, if system is calculating 105 rupees is coming, differences are very small, but understanding these differences, figuring out these differences is a very big task, because you do not know where things are going wrong, because you need to make sure whether your understanding is wrong or system calculations are wrong, because there is something called reconciliation. When we talk about reconciliation, one one minute, yeah, when we talk about reconciliation, you're talking about comparing two numbers. So when I talk about comparing two numbers, you need to start verifying the asset values, you also need to start verifying the GL values. When you do these verifications, make sure these verifications are accurate and the numbers are tallying with each other and there are no discrepancies, there are no differences. If these points are found out, if these points are figured out, then your calculations, your understanding of asset accounting is correct. Because most of the companies, most of the situations, you will find a lot of scenarios, lot of issues coming up from asset accounting, because there are different scenarios in it. Okay. Now these basic points, these basic fundamentals related to asset accounting you need to understand, and the prerequisites for understanding asset accounting is three modules: GL, AP, AR, and along with this you should also have the basic understanding on taxation, discounts and all, because while purchasing you may be getting discount, while purchasing or while selling you may have to attract some taxation, you may have to pay some tax, you may have to collect a tax from the customer. These points you need to understand, and these are all to be applied to your asset accounting. Meaning, when you do asset accounting, when you start understanding asset accounting, make sure you are able to relate different points. When I say you're able to relate different points, straight away you cannot understand asset accounting. So when you understand these points at the beginning, accordingly we will plan, okay, to understand asset accounting, there are certain prerequisites. I should know these points well in advance, so that with the help of these points, I can understand the remaining points. So these points, what is going to happen with these points? You are going to understand how you actually have to practice, what you actually need to remember. Clear? In short, this is about the basic information, basic points, fundamentals that we are supposed to know about asset accounting. At the beginning, to start with, these are the basic points that you need to understand, with which we will be able to understand further points related to different functionalities. Later on, what we are going to do is we are going to understand the different connecting points like your taxation, cash, bank, how bank reconciliations will have happen, how payments are going to happen, what kind of reports are executed by a client on a daily basis, on a weekly basis, on a monthly basis, what kind of reconciliations they will do, what kind of issues they will get, and as a consultant, what kind of activities you are going to perform. Everybody talks about projects and all. What are the different projects? What terminologies you need to remember from FICO point of view, and what are they related to? When we see these points, you are going to understand, okay, these are all related to SAP FICO. You have to understand these points in order to get into any job or in order to manage successfully as a FICO consultant. These things are going to give you clear understanding. These things are going to give you clear understanding to understand, to get familiarity with SAP FICO as a consultant. Otherwise, what we will do is we will end up learning only the configuration, which is not going to help us anywhere, either in clearing your interview or working confidently in your project or communicating, discussing with your client users effectively or comfortably, confidently in any project. Make sure these situations you will not get into. Uncomfortable situations where you have experience, you have the knowledge, you're able to configure everything, but still you're lacking something, that feel you should not get it. Okay, so this is all about your asset accounting at basic overview level, at very high level. So in the upcoming sessions, meaning in tomorrow's session, we will talk about the different points. So tomorrow we will spend a little more time because we are very late today due to different reasons. So I'll stop the recording here today, and in the tomorrow's session I'll do the continuation of this topic plus additional topic. Okay, so on these topics, so once I'm done with the few more topics related to taxation, cash bank, then we will start taking or discussing about the different points, queries, whatever you have on SAP FICO training whatsoever. We will be spending good amount of time to clarify, to understand all the confusions, questions, clarifications, whatever you have. Each and every question of everyone's I'm going to clarify. Don't worry about your questions. I will clarify your questions because most of your questions will get clarified when I explain certain points. After that, I'll take specific point related to everybody. You are free to ask any question that you have. I'm here to answer. Okay. Fine then. So we will connect at the same time tomorrow. Good night.
Good night.